Hi, everybody. Okay, as promised, this is the QA vlog of the Seljen webinar that these brilliant gentlemen, Socrates and Tyler, did last week. Thank you guys so much for attending. We have tried to collect all the questions that we've received, tried to synthesize them in a way that we can answer all of them holistically in the time that we have. So I will go off screen, switch it right over. First of all, Socrates, Tyler, brilliant job. And Socrates, you want to say hi and how you this is going to be structured for the next hour?
Absolutely. How's it going, everybody? I'm happy to be here to follow up on the webinar that we did a little over almost 2 weeks ago now. So we have gotten some good questions. There are a handful that we have picked out that we think are most important that should help to illustrate the most important topics. So we will be going over those. I'll be asking some questions. Tyler will be giving us his answers, and I'll be providing any sort of response or follow-up questions, and Leah as well. If she has any questions, anything that doesn't make sense to her, she'll be chiming in with potentially some asking us to elaborate or having some follow-up questions. So with that being said, I'm excited to be here.
Great, and I am too. We've been trying to figure out the best way to do this because we've got a lot of individual questions about individual formations that people have found. And in general, we're going to stay away from these really short ones that are, just over a matter of days or weeks, or even sometimes smaller, not because we're uninterested in them, but because I haven't taken time to study the formation on a short term. Weekly is the only thing I've ever looked at. Therefore, they tend to go on for quite a while, some of them a year and a half, like with the indexes today. So it's not that we're not going to get into that. I just don't have enough information about any kind of probabilities that shorter term ones are as valid as longer term ones. But what we have done is we've taken a number of observations that some of the listeners had, and we've broken them down into 3 areas. And then we'll take about 15 minutes for each of those areas. The first one has to do with our stop and reverse points, or the stops that are calculated above or below a broadening top or a broadening bottom. And because I'm an old timer at this, I came up with the system when it wasn't computerized in any way. There weren't any apps that we could use. There was really no algorithms for doing it, or computers that would allow you to do it. We had a digital equipment computer back in the 70s that was the size of my desk. It was enormous, and everybody's telephones is 50 or 1,000 times more powerful than our digital equipment was back then. And we couldn't program it anyway. So there was only a half a dozen things we could do with it, mainly just keeping payroll. In any case, I used graph paper to do all of this stuff, Hyperwaves and Consensio and Seljen and everything else. So those of you that had difficulty with finding the increments to put above broadening tops or below broadening bottoms because your monitor sizes were different than ours, I never even considered that. So thank you very much, because the answer to that has caused Socrates and I to give it a lot of thought, and we think we've got a pretty good answer for all of you on that question. That's going to be question number 1. How in the world do you set the stops in a uniform fashion using Tradingview? The second question has to do with something pretty intriguing. I don't know how some of you guys came up with these things. But they're excellent questions. One has to do with a fractal within a broadening top or a broadening bottom, or a fractal within a Seljen setup. In other words, you see one big one, and then you get another one inside that big one. And we've got an example of it that one of our listeners, I believe it was probably on Telegram, brought up. So we'll take a look at that, and we'll try to piece that together. The third thing we wanted to look at is another very interesting observation that I had never come across before. I was very proud after seeing hundreds of these Seljen 5s, finding a Seljen 7. Took us a year and a half of going through all kinds of charts before we found one, and we found it in real time. I can't remember which one it was. It was a commodity, and all of a sudden the 5 turned into this beautiful 6 off of a top, which means it fell very, very far. And then it stopped falling, and it started climbing and climbed all the way above the 5. And that gave us what we call now a Seljen prime, and that was very rare back then. It's still pretty rare. But then some of you asked the question, is it possible to go beyond a 7? In other words, all the way back down from a 7 top to an 8 below the 6, and then all the way up above the 7 to a 9. And the answer is yes. I didn't know it and I didn't believe it, but we've got some examples. We're going to use one in particular. I think it was Socrates that found it, and maybe someone else did. So going back to number 1, and Socrates and I will just sort of discuss this. I like the idea of what we suggested to you in the webinar, which is make the entire formation from 1 through 5 visible on your screen. And then go over to the right and look at what the increment is that gives you. And that's the way I will continue to do it. But a number of you said, yeah, but if I'm doing it on my phone, it's different. And if I use a big monitor, you know, a 3-foot or 4-foot or 5-foot, I had a 6-foot, almost a 7-foot monitor that I traded commodities on and played World of Warcraft, but forget about that. That I used to trade commodities on, and I'd be very interested to see what the increment would be on that. But it clearly is a problem on Tradingview relative to the screen size. Now, you can mess around with it and get it to the increment somebody told me, but it's a real pain, and then as soon as you do something, it all changes anyway. So because of that, Socrates came up with the idea, or maybe one of you guys did, but I think it was Socrates, that rather than using an increment in dollars or in whatever the right-hand scale was, which is dollars or tens of dollars or hundreds of dollars, what about doing it on a percentage basis? And that makes a lot of sense to me, because if you do it on a percentage basis of where the high is occurring, for example, on the S&P, if the S&P is occurring with a high at, let's say, 2,900, then you're going to get a $100 increment on my screen and maybe 200 on somebody else's and 50 on somebody else's. But if you take that, let's call it 3,000 as a peak on the S&P 500, as a broadening 7, a prime, or a 5 within the 7. If you took a number like 2%, 2% of 3,000 would be 60. And 60 is not far off of 100. If you go 3%, that would be 90. And 90 is not that far off of 100. It's even closer to 100. So then we started messing around with different charts, trying to find the best fit, and we came up with 2.5 to 3%. Looks pretty good, and I would use that. Rather, if you question the increment, then I would use a percentage, and the percentage I use would be 3%. And you would just go 3% above whatever the high is, or 3% below the low, whatever that is. Now, let's just think of some other examples. If we were talking about gold, we're talking about $1,300 approximately. So 3% out of that would be about $40. That's reasonable for a stop in my mind. If you're talking about a stock that's trading at $100 and it's just thrown in a formation, 3% of that would be $3. So that's a pretty close stop, a $3 stop above 100. So I can see as you get into lower and lower priced things that 3% could get a little bit wacky. At a $10 level, 3% is only 30 cents. Maybe that's too close. You know, I don't know. That's kind of what my thinking is at this point, so that everybody, regardless of monitor size, would have the same increment, so that it could be discussed on Telegram or with Socrates or with myself or with Leah or whatever, you know. So we're all talking about the same thing. That would be a standard way of doing it. I personally will continue to do what I have been doing, only because that's what I do. And it's not going to be that far off. But Socrates, why don't you jump in here and just kind of review what you're thinking here?
Yeah, definitely. So after seeing that, let's see here. All right. Yeah, after seeing the questions that were coming in and the issues that were arising from determining the increment, I definitely gave that some thought. And the first thing that I did was go over a number of charts using your method that you had taught, and on my big monitor, which is a pretty, you know, it's just a pretty traditional desktop, so it's not a small phone or something like that, or it's not an abnormally huge monitor. So I used the rules that you taught us, and I went through a number of examples and input the stop losses, and I didn't have to trail them because it was that first stop loss that was really only important. If you can figure that out, then you can trail it pretty easily. So I looked at a number of examples to get an idea, to get a feel for what's the average distance in percentage from the high or the low. So for example, I'm using Tyler's strategy, and if we have a 5, I'm blowing it up onto the chart, and then I'm using the increment, putting it one increment below, and then I'm calculating how the percentage difference between that stop and where the 5 came in. And what I noticed was that it seemed like the large majority of them were between about 2 and 3%. So I came to the 2.5% figure as an area where I would be comfortable using that myself, instead of using the incremental stop loss. And that's something that I do like, a set guideline that can be used by everybody, regardless of any variables that they may have. And I don't think that it should matter in regards to the price of the underlying asset. If the asset is $1,000 or if it's $10, a 3% move is a 3% move in my mind. And when you get a 5 or a 7 established with that 3-candle pattern, you really don't want the price to break above that at all. Once you have that 5 or the 7 established, say we're looking at a top, we've got this high between the lower highs on it. After that, we really don't want this price to take that out. That really should be, that's the topping formation that should serve as the top. So once we pull back from that, we really want the price to stay below this peak. But we don't necessarily set our stop loss right on this peak. Instead, we do take a little bit of a risk, and 3%, if it's a $10 stock, sure, that's only going to be 30 cents above this area, but still that's 3% above this high. And in my mind, it doesn't matter what the underlying price is, you've got this topping formation from the 3-candle pattern, and you're going to exceed that is something that we don't want at all. And if it exceeds it by 3%, then that is enough for me to go ahead and say that I'm going to take a stop. And then remember that it does need to be on a closing basis. If it just wicks up there, that doesn't matter for these stop losses. We do need it to be on a closing basis. So that's my line of thinking, is that we want it to be above that 5 on a top or below it on a bottom, and we want it to be a way that it can be determined based regardless of any variables with Tradingview or screen size. And the percentage, I think, works really well because to me it's irregardless of what the underlying asset is valued at. It's the percentage move that matters to me. Am I thinking about that correctly, or are you thinking about that a little differently, Tyler?
I agree with you completely. It's funny when you use percentages, how things get skewed sometimes depending on the size of the number that you're using the percentage on. And particularly in technical analysis, that pops up, but it doesn't seem to in this case. I think this is a good solution for everyone, and it feels right. I think the size of it is about right. And because of that, we'll go with that as the answer to the question. And then everybody just use it and let's see how it works out in practice. But Socrates said another interesting thing that goes along with this question, which is after you determine where it's going to start and run it for 5 weeks, and you begin coming down, obviously what's going to happen is you're really drawing a trend line. And the question is, where do you draw that trend line? Do you draw it through the center of the weekly, or the end of the weekly, or the beginning of the weekly? And somebody in Telegram today just made the comment, well, it's really a pain if there's a big one and it's been going on for a long time, drawing all those stupid little lines in. Now, in the old days, it was real easy. You took a ruler and you put it on your graph paper and you just drew the line, and then you could go that far in 8 seconds. But it's a lot harder with the computer, and it's tedious, and it just goes on and on and on. So the answer to that is, once you've got the first 2 or 3 drawn in, you just draw a line and you will see where all the other ones are going to go. But where are you going to draw it through? Are you going to draw it through the center of each of those weeks? Or are you going to take the beginning of each of the weekly lines that you've drawn on the 2nd week, the 3rd week, the 4th week, and then connect those? Or do you do it from the end? And I don't have an answer to that. I was just thinking about that. It's a shortcut because you're not really describing the entire week with that line. I would imagine what you want, well, I'll ask Socrates. How would you draw that line?
That is something that I would actually need to think about a little bit more, and I want to pull up a chart just so that everybody knows exactly what we're talking about.
Let's do that and just do it real time. And first of all, you'll see, if you haven't done it before, how tedious it really is. But then secondly, the dilemma that we have, which is exactly how you would draw that. So this is the NASDAQ 100. That's the top. Over on the right, we've got a $100 increment. So given that, and if we did 3%, what's 3% of that top?
All right, so yeah, I'll go through that real quick. So we've got the top here, high is 78.51, 7851.
Yeah, so that's over $200.
And then I will multiply that times 1.03. That gives us 8087. So our stop would be right about starting up in here, a little bit higher. So we do see that 3 might be a little bit excessive. And I think I do prefer the 2.5% myself, but you guys will probably want to check this yourself and do a little bit of your own back testing. But we'll go with the 3% for now. So we got our 3% up there, and then we extend it for 5 weeks, starting with this one, 1, 2, 3, 4, 5, right there. Okay. And then instead of progressing it by 1 increment, now we would progress it by 3%. And that would start back right here at the prior peak and extend out 1. And then that is moving at a rate of about $150. So this is not going to be, well, I want to make it accurate. So what we're going to do is 78.47 times 0.97. That gives us 76.11. And that's the thing about 3%. It could now maybe progress a little bit fast as well, is something to consider. So here we see that progressing at 3% per week is bringing us down a little bit quicker than if we were just going 1 increment. So that is close, and it might be what you decide is best. I do prefer the 2.5, but let's go through what we were talking about in terms of now we've got these two. Instead of drawing out all these little lines, we can take a look at drawing a trend line. And the question kind of is, do we use the end of this week, basically the end of the week, the beginning, or the middle? Where should we be drawing the trend line through? So that's kind of the question. And what I would think is that we would use the end of the week to connect these. Once you have a couple drawn, now we connect it with a trend line. And now that's good. If we have it at the end of the week, now this trend line is basically our stop loss. A close above this trend line would indicate being stopped out. And I'm inclined to think that going right through the middle would be the way to do it, opposed to using the beginning or the end. If we put it here, it goes right through the middle, and I'm inclined to think that'd be the best way to do it, but I probably would need to give that some more thought. What do you think, Tyler?
I think through the middle makes sense. Let's just think of it, because the line isn't indicating anything about time. It's not saying the beginning of the line is Monday and the end of the line is Friday. It's just saying that at any point during that week's close, if the week closes above that line, you're stopped out.
Yeah, I think it's got to be the beginning, because these lines are indicating price. So if we look at, so right here, this stop right here is indicating a price of 76, call it 76.10. So that's the price. If at any time during this week we close above this price, we are stopped out. And if we see that this line here is coming in at the right price, if we use the beginning, we're on this week right here, so this candle will have to go through right here to break this trend line, and this trend line is at 76, call it 76.10, 76.10. So now this is at the same price for this week to break through. If we had it over here, now
That's
all of a sudden
right.
that's like for the next week.
Yeah,
Would
you're
be
exactly right. That's the answer. It's got to go through the beginning of the line. So
so it would.
if you want a shortcut and you don't want to draw all of those stops, now the easy way to do it is you don't have to draw them all. You know, just draw the next one down, and if the price is below it, you don't have to worry about it. And then the next week, you know, you can draw the next one down, etc. But this gives you a good visual of the angle that things are happening. Right now, this week, we are testing that particular line, but now it looks like we're going to close well below it, although earlier in the week, we were right smack on it. So, and you'll find that there's something very spooky about waiting 5 weeks and then going down by this either increment or percentage, how it really does give you a good indication when the momentum is ended. And today's week is over because it's Friday at 4 o'clock. So that is the closing price for the week, and it's fine. Now, next week, why don't you draw that line in, and it'll give us some idea of what next week looks like. Because what we're looking at now is the possibility of getting stopped out of this short trade. And I'm interested in that because we are still long, even though we're 50% in cash. So I could very well be using this as a signal for me to get back into the long side.
Yeah, this is very interesting. So it'd be 73, 79 next week, right? About here is where we'd be looking at for next week. And just think about how close, how this is getting very close to indicating an exit. And that's also what we're seeing basically on our other indicators, is that this thing is really getting close to showing bullish indicators and showing continuation. And right here is really where we have been looking at based on a number of other indicators, that if it can break through this area, then it's starting to look quite bullish, and that we want to be getting back in or getting fully in. So the stop loss is coming in at an area where other indicators are showing that it's a major boundary and would be a significant to break through it. So that's something that I really like to see, is the stop loss system working in line with what other indicators are showing, and with what we're seeing on other indicators. So yeah, just to clarify there, this shortcut was drawn. We start in the middle of the original stop loss. So if you start in the middle of that line and then connect to the beginning of the following lines, then you can trail that. And if the week closes above this trend line, then you're stopped out. And that can be a little bit easier than drawing all of those individual checks, those lines here. If you just draw a couple, now you've got your trend line and you can get the right price. So I think that answers that question.
Yeah, that's good. We'll move on to the fractal question, which basically states if you've got a 5 or a 7, either a top or a bottom, what happens when you get another 5 or a 7 within that first one? And we're going to use the example of Chipotle, CMG, if you want to pull that up. I believe it was one of our people on Telegram that pointed this out.
Yep, this was from Fazen.
Oh, yeah, Jeff. Yeah. He's usually all over this kind of stuff. Okay,
yeah.
So this is Chipotle, which has had an amazing turnaround. And usually when you get big V bottoms, it tells you something's going on. What you're seeing here is first of all, right there, you can tell that something's going on with a 5, 4, 3, 2, 1. That's easy. But then you come all the way down to these new lows in 2018, and that's clearly a 6. Now, you made a fortune on that 5. You can just picture you're getting out right on that green candle, right after, yeah, that high. You're going to go 5 weeks over, and then you're going to bring your stops down, and you might get knocked out on that first big reversal. But in any case, you did very, very well.
Look at that. Didn't close above.
Wow, incredible.
Close. I mean,
incredible.
That's a penny.
So you basically ride that baby all the way down. Now, when you ever do that, you're in a 5 and you just keep going and going and going. Number one, you should be very happy. But number two, you should be looking for a 6. And there's a couple of 6s on the way down here. There's one there. There's one there. And finally, there's another one. Now, we don't play 6s. You're waiting in a 5 to get stopped out. But you should be thinking 6s. And the reason you're thinking 6s is because you have the potential of someday going up to a 7. So we didn't quite get there by what I see up in the upper right-hand corner. The last high doesn't look like it kind of wicked high enough to get us a 7 yet off of that formation. But the way it's moving, we're going to probably get it in the next week. This is a monthly chart, so it'd be interesting to look at the weekly just to see if maybe we've got a 7 there.
And yeah, just to clarify what we're looking at real quickly. So remember that this 6 is also basically a 5.
Right.
So that's something that that can be a little bit confusing, especially when looking at fractals where they're appearing within each other. So that's one thing that I wanted to show, is that we would be looking at it as a 6 due to this count here, but it could easily, so here's our 6, but say you start here with a 5 and you go 5, 4, 3, 2, 1.
Exactly.
Then you would have a 5 bottom, and that's where it can get a little bit confusing. And unless you remember that the 6 in the prime is also a 5 from the other direction. So we had the 5 top. When you get the 6, it's also basically just like a 5 bottom, because every time you'll just be able to remove this number, just get that out of here, get that out of here, and now we have our 5, 4, 3, 2, 1. So just remember that when we do have a 6 down here, that could easily be relabeled as a 5. So anytime you hear a prime 6, that is something that you should be thinking of as the same thing, basically as a 5. And like Tyler mentioned, why that's really important to understand is, sorry about this, why that's really important to understand is because if you are just viewing this as a 5 and you're not actually viewing this as a 6, that means you're going long here, you're going long here, you're going long here, you're going long here. So if you're only viewing these as 5s, then you're taking those signals and you're going long and you're getting stopped out every single time. Whereas if you know that this is a 6, we're not taking the signals provided by the three candle formation. Instead, we're waiting for the stop loss to get triggered. So we've got a 6 down here. We had multiple before, and then we're waiting. Like Tyler said, we're thinking in terms of 6, 6, 6, but we're waiting for this stop to get taken out. As soon as that happens, right here, now we can see that the stop is taken out, and we've got the 3 candle formation for a 6. So now we can basically trade it as if it was a 5. But if we didn't identify it as a 6, we would have traded it much differently and got it stopped out multiple times down the way. So that was one thing I wanted to clarify.
Yeah, that's a great point.
You wanted to look at the weekly.
Yeah, I just want to see if maybe we actually got higher on the weekly. Nope, we didn't, so that's fine. We're waiting for that. It sure looks like it wants to. But now here's what's interesting on the weekly. This is really what the question was, which is, if you blow up where we are over here, it sure looks like you've got another formation here. I didn't look at it closely, so let's see.
Looks like it might be a 1 short, which is actually good because the bigger pattern is a topping pattern, and we want to see this kind of form a topping pattern. Which,
yeah, so if you put the 5 up at the top we just had exactly, then it should work out very nicely, which gives us a fractal 1, 2, 3, 4, 5 within the 7th leg of a prime. What does that mean is basically the question. And again, this is very unusual. So if it was Jeff that found this, thank you very much, because this is fascinating. And then what are the implications of that? Well, it could be that what's going to happen, by definition, when this 5, and we won't have that until next week, if the next week is lower than this, if it's not lower, then we have to wait for the 5. But let's just assume that next week we've got a lower high, and that would give us a 5 on that green candle. And it would give us a 7 on the big move. So if that all occurs, is this kind of like a trigger that would give us an early warning that this little 5 is going to get started? And then how would we draw the stops? Would we use the stops for the big 7? Or would we use the stops for the little 5 here? Or does it make a difference? Would the stops be identical in either case?
I think that the stops would be identical in either case. Correct me if I'm wrong, but basically, so what could happen is a couple situations from here is if next week is lower and closes lower, then we would get our 5 on top of this candle, but we would not get a 7 because it's not higher than this 5. So it would be a 5 sell if we close next week lower and don't ever trade higher, but it wouldn't be a 7 sell. That would be interesting, getting a 5 sell up at this kind of resistance area. But what would be most interesting to me is getting a 5 that is right in line with a 7. So if this takes a couple weeks, let's say it goes next week, it pumps up and creates a new all-time high right here, and then it falls back and closes lower that following week, giving us the 3 candle pattern. Let me try to draw something in so it goes like that. And right here, we get our 3-candle pattern. This peak right here is what we would use to determine the stop loss. And that would be based on this 5, and it would also be based on this 7. And it would be the same stop loss for both.
Yep.
Do you agree?
I sure do. That's great. Very interesting. Also, you can picture at the bottom where we've got the 6, which is also a 5, as we pointed out before. But as a 5, we would draw the stops in 5 weeks and then up. And it looks to me like, once again, that first big correction would not have taken us out. That will be a close call. But it's very funny how the first corrections off of a 5 top or a 5 bottom or 7 top or a 7 bottom get scarily close, but don't quite take it out, don't knock you out of it. We'll take a quick look here and just see what we got. We've got, this is a weekly, so that's 1, 2, 3, 4, 5, yep. And then bingo, it might have taken it out. You might want to blow that up a little bit so you can tell what the heck's going on. There you go. Okay.
And we start from the middle of here, connecting to going the other way. I'm forgetting.
Yeah, from the other way, I guess you want it off the end, not the beginning. So it looks like that one would get stopped out right at that point. And the question then is, what would you be doing? Because that's a 5 bottom, 5, 4.
So if you're stopped out here, you basically would be waiting for something up here, right? There's no re-entry based on.
Oh, weird.
anything.
Guess what? That's another 5. That's a 5 right there. 4, 3, 2, and a 1. So you get stopped out of your lower 5, but then you have another 5 that this thing graciously gives you. So at the point you're being stopped out, you're also getting back into another 5. And so it goes. Very interesting pattern. You don't see what we are talking about now at all. I mean, to have fractals within fractals depends on the security. It depends on a lot of things. I've never figured out what makes them anyway. We tried to discuss that in our webinar, the push and pull between buyers and sellers. Obviously, this was very controversial because of the problems they were having with the food and people getting sick, and that's what drove it all the way down. But you had people that knew what the growth rate was and the profitability on the other side of the trade, so that probably explains this back and forth, but fascinating. So these are these are 5s within 7s. These are fractals within 5s and 7s, and these are right in the middle of a 7 or a 6 going up to a 7. We get knocked out, but at this exact same moment, we've got another 5 to get you back in. So just bizarro stuff. Thank you for the question. It shows there aren't any simple answers. You've got to think through it. Luckily, Socrates is helping us do that. We've got one more we want to cover. We've got a hard close here in a little bit, which is 4 minutes, but we will do it as quickly as we can. A theoretical question. Somebody said, if you've got a 1, 2, 3, 4, 5, 6, 7, which is a prime, is it possible to get an 8 and a 9? And the answer is yes, it is. And it's theoretically possible then to get a 10, an 11, and a 12. But just also imagine what you're talking about. It's so weird to get a 5. You've got to look at a lot of charts to get them. We're getting a bunch of them right now, but look what Socrates is pulling up. This is JP Morgan Chase. And there you've got a 1, 2, 3, 4, 5, 6, 7, 8, and a 9, which means we are going, we've also got a 10 at the bottom, and someday you could even get an 11. Now, at some point, this gets a little ridiculous, meaning, how in the world do you play something like that? Well, the rule is you're going to sell the 5. That worked out nicely as you drop down to the 6. And you wouldn't have gotten stopped out off of that 6 because it takes 5 weeks before you start coming down. And then you had this huge green bar up, which kicks off the run up to the 7, which barely makes a 7, just a little tiny wick higher, as the 9 is a little tiny wick higher. So if I was playing this thing, which I don't think I would, I mean, I would have probably played the 5, but that doesn't look like a top to me because we're not coming off of a top. I would have been interested maybe in playing the 6 as a 5, because then that's a bottom. And then you go up to the next 7, which I might play as a 5, but probably wouldn't, because it's just where the first 5 was, which is kind of more of a top, but not really. It's kind of a weird thing. And then you go from the 7 down to the 8. Now, at the 8, I'd probably be getting excited because I'd say, well, okay, this is really a 7, and it's a bottom. It's a 7 bottom. Maybe we're going to go somewhere. But then as soon as it gets up to the 9, it peters out again and then goes down to this 10. So it is not only theoretically possible. Here is an example of one. It has not gone up to an 11. Yes, it has. It's gone to an 11. And then it soared above that. So the only good trade in that whole thing was the 10. And you would have been knocked out of the 10 in that flat period below the 9, to the right of the 9. And no real way of getting back using the Seljen system. So we will keep looking for examples. This is amazing to me. It's great what you can do with the computer, where you can search many, many things. And I wish I had more to say on that, but I didn't think it was even possible, but I was clearly wrong. It's not only possible, but confusing, making it very difficult to trade. I would say, as I always do, you want to be overlaying all kinds of other technicals when you're putting money into something. And those other technicals are stop and reverse points. It's consensio. There's a lot of ways of double checking a system, particularly when a system appears to be going haywire, like this is doing for JP Morgan Chase. And that's about all I've got to say. Socrates?
That's pretty much all I've got to say. Nothing to add. Appreciate you sharing this system with us. It is absolutely fascinating and obviously very applicable, especially right now. We're seeing these things all over the place. So not only a great system to know and to use, but a very timely one to be learning. So thank you very much for all the wisdom that you are sharing with us, and thank you to everybody who took the time to attend. And as always, feel free to leave us any feedback or ask any questions in Telegram. You can always @ me, and I will get back to you as soon as I can. So thanks again.
Great. Thank you very much. And Leah, if you are still here, great. Thank you so much for getting this all set up. Any questions you've got or any observations?
No, I think that was really, really interesting. As you guys have seen, any additional questions, Socrates and Tyler are doing a bang up job, especially Socrates. You're so quick at getting back to you guys on the Telegram group. So any questions you have, throw them into the Telegram group, and I will upload this as soon as possible. But everybody, bye.
Bye-bye. Thank you all very much for attending the webinar.